237th Block Talks, we chat with James Harris, Group CEO of Tesseract, to discuss the arrival of institutions in crypto. I'm your host, Mauricio Magaldi, and this is BlockTalks, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. All right, everybody, I am here with James Harris, who's going to tell us who he is and what he does with blockchain. James, welcome to BlockTalks.
I'm so happy to be here, Mauricio. Thank you for having me, and I'm looking forward to the conversation.
So, James, let's pick this from the top. I'm assuming you had a pre-crypto career, and when you and I were in the green room, we were talking about, we have a kind of shared past on Citibank. So walk me through what that looked like before crypto, how crypto got into your life, and why you decided to move into this space.
Let's go back into time. So before crypto, I was 15 years in TradFi. So 15 years up until 2017. I started actually as a trader at Salomon Brothers. I was an intern at Salomon Brothers before they became Citigroup. And then worked for multiple banks, and I traded as a hedge fund manager, also ran various risk allocations, and I was really lucky to trade lots of different assets. So I traded equities and futures, derivatives, bonds, FX, lots of different assets, which gave me a really strong idea of how markets were kind of stitched together and how they worked. And obviously different assets, different volatility, different regimes, really, really exciting. So yeah, no stranger to volatility. But I first heard about Bitcoin properly in 2013. And I was sort of getting interested in it. A couple of my friends were talking about it. And I was working for a bank, Standard Chartered at the time, in 2013. And then, I don't know if you remember, but Ross Ulbricht, who's now been pardoned, was arrested. And that was all over the FT. And I was working at this bank. And I thought, oh my God, I can't really go for this. And so I let it drop. And that was a big mistake. So that was my first shot at it, and fumbled it. But then in 2016, I had another little look. So at that time, I was working for a deliverable FX company, and I was COO there, and I realized actually that was the final missing piece. So I mentioned I traded all these other assets, but then deliverable FX was a whole new different thing. So you and I would call that payments. And we were making remittances globally, and I realized how broken everything was. I couldn't believe it. I couldn't believe that actually the system that I thought was fair was sort of managed by a bunch of gatekeeping banks that controlled everything, and it was at their whim that you existed. And so that was when really crypto went from sort of an asset that went up and down and had volatility to like something that made sense to me. And that was really interesting because I saw straight away that the Bitcoin and then Ethereum was doing its ICO, obviously decentralized computer. That made a lot of sense. So that drew me in. And of course, there was a bull market, so that helped, made it easier as 2026, 2017 bull market. And I figured that actually I was going to make a real go of working in the space. And my first intention was to do what I'd always done, just create a fund that was able to hold these assets. And so we set up a regulated asset manager in the UK. We used someone else's license, and it was the first entity in the UK that could do these kind of things. But we quickly realized actually that the custody layer was broken. And so it didn't exist, right? So at the time, you didn't have five blocks were just starting out, copper were just starting out. BitGo was around, but they were sort of a bit US centric, and there's no one else really. So for us, it made perfect sense that actually, if we're going to hold these assets, we need to hold them properly. So we did a deal with a tech company. We built a custodian. The 2019 bear market hit, and we decided to exit, and we joined a larger firm. So that was my first exit. I didn't hang around. In the end, I then joined a market data company, quite a famous one at the time, called Crypto Compare, which was sort of up there with CoinMarketCap. Had quite a big following in Latin America, actually, so that was quite interesting. And then I scaled that for 4 years ahead of its sale to CoinDesk. So I've been working in crypto for 10 years, scaling businesses, always on the sort of data regulated security side. And then the opportunity came for me to join Tesseract as the CEO, chance for me to be the boss again, which I had to take after sort of 7 years not doing it and sort of regaining my strength. And just absolutely delighted to be at Tesseract, back in the coal front near the market itself, rather than sort of helping others go in there. So that's me. And And yeah, I feel like I'm full circle again, right, watching the markets and working with them. So it's cool.
And it's an interesting kind of full circle also because as outlawed as crypto may have started, what we're seeing now is a huge convergence between crypto as an asset class in traditional financial markets because all of a sudden the markets realize that there's some conditions that enable them to actually tap into this sector that was remote for a variety of reasons. Um, I I want to say that the regulatory landscape has a lot to do with it, but also client demand, right? Most of your peers and yourselves, you're responding to client demand first and foremost, right? So having the regulatory framework and the jurisdictions in which you can actually perform this at a professional level changes how the asset class is perceived and ultimately how it's generating value. Other than that change in the regulatory landscape, what do you attribute this kind of now serious first institutional wave of attraction? Is this all? Are we all just gonna deal with stable coins? What the hell are RWAs doing here? Like, paint me a picture of what do you attribute this kind of, I wouldn't say renaissance, but it's actually the first arrival of the institutional markets in the crypto as a like a professional asset class.
I think I'll start by saying that I was drawn to the asset class because of its permissionlessness. And it feels somewhat anathema to that, where I'm effectively building institutional products uh, within crypto pretty much since I started. So that's I note the irony there, and we at Tesseract will probably get into this later, but we do a lot in DeFi, and of course DeFi is very permissionless by definition, and yet there is institutionalization happening in DeFi as well, part of the trend that we're part of. So I feel a little conflicted on that side, insofar as like I think that the technology is clearly there to provide permissionless access to financial services. One of the big reasons I drew myself to it. But then equally, like if institutions want to play, and there are lots of reasons why we want institutions to play, they need to play in a way that is familiar to them and safe to them. And so, and then at the same time, like I think that the regulators do a pretty good job of making sure that the space is safe for for retail investors. Now, one might argue, hey, resale should be allowed if they want to lose their shirt. And I'm sure you've lost your shirts on a few investments. I certainly have. That's kind of how it works. But I've also lost them in traditional assets. And so I think that we are seeing the beginnings of a coordinated regulatory frameworks that are appearing not just in Europe, but in the UAE, in Asia, in Latin America. Brazil is very far ahead. And I think that one thing to bear in mind is that just because something is regulated, it doesn't necessarily mean that you can't lose all your money. You can, right? These assets, just like with equities can go to zero. You know, altcoins can go to zero. One hopes the Bitcoin doesn't go to zero. So I think that within that framework, I've dedicated my career in crypto to helping institutions access the space, and really that's because that's been my skill set, and that's been what I've been able to bring to the sector, and so that's how I can sort of live with myself, knowing that there might be a part of crypto that I'm sort of institutionalizing, and that's what some people not super keen on. But I think that it really matters, and I think it's really important for crypto to become adopted that institutions can get involved in it. So that's the nutshell. And I'll probably get into the types of ways that they've been playing. But for sure, like if you look at the recent market action, like in the last 6 months, you can definitely see institutions now appearing in movements like I would say that the February uh, correction, let's call it that, was largely institutional driven, using traditional products like ETFs and options on ETFs. So it's not just now movements in crypto completely being driven by crypto native firms. It is now clear that institutions are large enough and aggressive enough to move the needle, which is, you and I have probably heard that phrase, institutions are coming. Be careful what you wish for, right?
Oh, I so want to double click on that because it is also I'm not a maxi of any kind, but of a decentralization maxi, right? And when you think about institutions, they are usually centrally regulated, which is diametrical to what decentralization wants to be. And therefore, I don't treat this as a technology, but I treat this as a paradigm. So your company, Tesseract, is working with institutions on the DeFi adoption, right? And there's almost like a contradiction of being regulated and being on DeFi. And I know two can play this game, right? The individuals and DGens can play the permissionless game, and no one tells me what to do. I'm going to do it myself. I'm going to be my own bank. I'm going to run my own risks. But then when you're in an institution, more often than not, you're a custodian to the capital of somebody else. Of course, there's proprietary capital, but you're usually a fiduciary responsible from that angle, and those two things might sound contradictory. And I'm one hoping for what I call reg DeFi, or regulated DeFi, in which we have even regulators coming on chain to kind of enforce rules and regulations and then code as law type thing. But talk to me about what is life like operating in this kind of now shape shifting, still in kind of discovery mode interface between DeFi and regulated institutions. Like, there's got to be some types of guardrails you wouldn't see otherwise, and then you have to enforce some of those things. But I'm super curious to understand that intersection from someone actually living within it.
So it's a good spot for me to talk about risk. And we've talked about risk a lot. Crypto assets are volatile, and investments can go up as well as down, and you can lose all your money. And so I think that's something that you have to look at. Now we clearly work very hard to try and earn risk adjusted returns, but we also have what we call managed DeFi products as well. And so I think this is where the two worlds collide. So when you look at Tesseract, you will see effectively two entities. You're two businesses. You see the business whereby we take in deposits from our users, and we then lend them to other centralized counterparties in a centralized lending book, and we receive rates in excess of what we pay to our borrowers, and it's the wholesale lending model. It's just like a bank basically, and that's how we earn our living, earning a spread, and everyone's happy because effectively everyone is getting what they want out of that transaction, and in that business, the yield is a function of credit and counterparty risk. Now, the second business that we have is what we call our managed DeFi business, and that is where again we take in assets from users, and we then deploy them across the DeFi ecosystem, and then we earn yield that way. And so, yield in that sense is a function of protocol risk, and to some degree the asset risk as well, and the platform risk. So two different sources of risk. And what we recently launched, and this is really exciting, is we've recently launched vaults as well, and so that creates a non-custodial version of DeFi, whereby a user can effectively from their wallet spin up a vault that is a Tesseract vault that they own, and they own it in its entirety, which is different to what the current ecosystem is. And that's a way of us landing a MiCA compliant version of vaults, which is really exciting for us. I want, I know, given your following, we mustn't get too much in the technical weeds, but this is a big innovation. What Tesseract has launched in April. So I think that now to answer your question. So I think that we definitely do our bit for DeFi propagation, but we do also do our bit to allow the institutions who want to take advantage of the opportunities in DeFi to access it in a way that they can do without getting in trouble with their own regulator. And so at the moment, I think that prior to our launch of the dedicated MiCA compliant vaults, people were having to take some regulatory risk using vaults. And they could do that because ultimately vaults aren't explicitly in scope of the regulation. So they're not explicitly mentioned because, of course, they're an innovation that happened after the regulations properly started. However, if you then look at what the activities are underneath, they're clearly regulated activities, right? And so just because something is in DeFi doesn't mean you can then suddenly conveniently say, oh, well, it's out of scope, so it's not regulated, right? So we wanted to launch vaults for a long time, but we, as they were in the market at the time, we couldn't because they weren't compliant. So we had to effectively launch our own version of that. So that's how I think. So again, it's a pragmatic balance between catering to institutions and corporates that require that regulatory standard and flow, and also allowing the DeFi ecosystem to flourish, because we care very much about that, right? We were all born out of that desire to create, especially our founder. He was born out of a desire to create permissionless access, and so that's very close to our heart. So even though we look institutional, we do care a lot.
How is the relationship between, you mentioned Micah a few times, so the European regulator and innovators like yourselves that are building these things? Because I'm well aware that regulators can't closely follow innovation. It's not in their remit, it's not in their DNA. They are followers, right, of innovation, and that's perfectly fine, I think. At least until we all get replaced by agentic economy. Um, but but what is the conversation like when you're designing a product like these vaults and the regulator needs to, like, do you go to the regulator? Are we in a process of licensing a decentralized piece of the infrastructure? Like, what is the type of conversation? And I know in Europe you have a lot more of this kind of engagement from the regulator now that they, they have a framework, they can talk about it intelligently. um, but you might also have clients elsewhere with different regulators in different regimes. So I'm just trying to, pick your brain on what has been your experience dealing with the regulators as these innovations make their way in a market.
Our starting point is always, what is the regulator trying to do? Well, they're trying to protect the the retailer, the retail person against effectively wrongdoing and being missold products that they couldn't possibly understand. And so I, I think, or aren't made aware of the risks appropriately, and that kind of thing. And so I think that from our perspective, we know, we look at that and say, okay, what is the intention of the regulator? In Europe, we've been the blessed with the MiCA regulation, which is the markets in crypto asset regulation. For those of you in your neck of the woods that probably don't see that every single day, there was a big step in Europe. So it took us from sort of 27 fragmented regimes to one unified approach that covered, custody, exchanges, execution, issuance, and that kind of stuff. And it was a positive insofar as, it gave a signal to institutions and to corporates and high net worth individuals that crypto is legitimate. So it was very good. If you remember when it came out at the time, for all its shortcomings, it was still a very good holistic framework, which we've seen places like UAE as well. But I think you've also got to then say is that this is a framework that coexists with other ones like MiFID and the alternative investment framework and that kind of stuff. And it's important to then say, okay, we want to offer these products. We've got three rule books that we need to look at. And actually, the rule books, even though they don't mention vaults by name, for instance, you can actually apply the rules and say, okay, we can create a product that's compliant by design, i.e., matches all of these things. Like the way MiCA works is that it's explicit in some places, and then it doesn't talk about other things because it knows that the TradFi regulations already capture things like that, like securities and commingling of assets and stuff like that. So these are all constructs on the traditional side already, right? And so again, it's good because now you say, okay, it is actually possible to apply the rules, but it's sometimes more convenient for some people to say it's a grey area. I can take some risk. Now, I think that the regulator in general, they saw what happened in the pre-Trump administration, and there was a little bit sort of regulation by lawfare that happened in the states, and that was not good either. That was too far to one side. You don't want the Wild West either, but you want a pragmatic relationship with the regulators. And I think that we've always sought to get a pragmatic relationship with the regulator where we say, we know where you're coming from. also look where we're coming from, because we think we can create new products that perfectly fit or very well fit into your framework and are doing the number one thing that you care about, which is look after the the individual. And I think as long as you do that, and we have the open dialogue with the regulators, and we have regular catch-ups with our regulation, we tell them about, excuse me, we tell them about our upcoming pipeline, and in a lot of cases they aren't aware. They haven't seen this thing yet, and so it's down to us to educate, but then also to try and understand their perspectives and say, okay, I see where you're going with that line. Here's why it's either relevant or not relevant, and then we try and have a dialogue. And so it goes hand in hand, and I think that's part of the responsibility that one has when one takes the regulatory ticket. They're hard to achieve, and then you want to make sure that you're always doing the right thing in the eyes of the regulator as well. But they will want to make sure that innovation is not stifled, and so sometimes you can overstep the mark, but then they say you've overstepped the mark, and then you step back a bit and you say, I won't do that again, and you continue in that way. And I think that that is the right way to work with the regulator.
The push and pull tension of innovation in regulated markets is, yeah, it's kind of a staple there. Um, I do want to talk a little bit more about innovation. So I've been doing a lot of investigation, and I don't think anyone that is operating either in crypto or in technology has escaped the AI agent frenzy that we're seeing now. Um, that is yet another layer for regulators to worry about. But on the innovator position, which is where you sit, what has been your current experience with AI agents? Are you guys trying anything? I know this is even blurrier in terms of responsibility attribution than crypto than DeFi or decentralization, but you know it's it's the talk of the town, and I'm sure there's some shape or form of testing in labs type stuff. So what is that like? And if there's anything else you guys are testing with and you can share, I would love to understand how you're tackling the next wave of innovation in this particular space.
Yeah, you are asking the big questions. This is a multifaceted answer, so forgive me if I start out sprawling. First of all, as a regulated entity, you have quite a lot of responsibility when it comes to privacy, so GDPR, when it comes to having the right security, so we're SOC and ISO compliant. And there are very clear rules actually as to what one must do with data in general. And the risk that you have when you use AI is that effectively some of the boundaries and safeguards could get knocked over or blurred, which means that you could leak inadvertently data to third parties. And that's something that you have to be very careful about. So that's the first thing. So one has to be very aware as to what one is getting into, and you have to be careful. Then the second thing is that AI is the greatest source of work leverage that I've seen emerge in my career. I thought crypto was big when it was emerging, but this is something else. And I think, especially with us effectively in a bear market and resource constrained, AI is presenting compelling ways to do work at scale. It's allowing lots of people who are not super technical to become very technical with their AI sidekick. And it's very clear that we can lean on AI to really supercharge our development and growth. We have to do that. We have to be very careful because we have to do that in a safe and sustainable way. But the since I've been very pro AI in our firm, and I've encouraged people to play with the tool in a sandboxed way, and then try and find ways to extrapolate that out. And I've noticed incredible changes in very short periods of time of people's performance, whereby they might have been withheld from some sort of skill that they didn't have. Now they have it, and they can really get through the workload of what before would have taken them a lot longer. And that's of course to our firm and everyone's firm's advantage. And I think that's the great thing. It does level set some things, right? So people who were fantastic at coding, perhaps um, some of their advantage has been eroded. Clearly, not all. Like that kind of ability is still massively ahead of the average person using AI. But I think it's really that it's an increase in leverage. We have to lean into it. We are 20 people. We're running a regulated business, and we're trying to grow and develop new products. So uh, we are leaning in, but it is frightening to see the pace of change. Like people are talking about using their own AI agents that they've built or home rolled, right? And two months ago, it wasn't a topic. So it's I don't know about you, but I'm getting a lot less sleep than I used to. But it's a lot of fun as well.
If we think that the crypto UX is not for the average person, we also have to agree that personal AI agents are not also for the average person. So if you've never messed with technology, you're not going to buy a Mac Mini and then run a Claude bot and then share all your API keys on a GitHub. Some like this is not for you. Like, don't take this as advice. These are regulated professional firms exploring technology frontier. So that's where these things happen on a kind of safe, controlled manner. But I'm with you. I've experienced my personal productivity, whether with AI agents or just the use of an AI chatbot as a thinking buddy to a certain extent, has been fundamental in even freeing time for me to just think by myself. So it's been a dramatic exploration in time efficiency. And given that I am a slave to my Google Calendar, freeing time is of essence, and that's been a lot of fun figuring some of that stuff out. I'm no longer an engineer personally, but now that I can quote unquote vibe code, I can roll my sleeves a little bit more and lean into people who are absolute beasts of engineers to tell me where things went wrong. So there's an even better level conversation with people who are actual engineers, and they're not me. So this is a good progress.
To be clear, the top engineers still have a huge advantage.
Oh, they're gonna fix all the vibe coding in the world for sure. A question for someone who's been in the industry for a very long time, and you've been through the ups and downs, ICOs and whatnot. Do you have a recipe or a regime where you take care of your mental health, your physical health to kind of keep level with the industry? Because the industry doesn't stop, but we're not the blockchain. We just love working in the blockchain space. What is your kind of recipe to keep going?
The first thing that we always talk about is that crypto has been quite cyclical. And so you get these periods of euphoria and absolute despair. And I would say that we're in the latter at the moment. Maybe, hopefully coming out of absolute despair, but we're certainly in extreme fear territory. And I think that in AI, we're in euphoria, and so and people are beginning to see what's possible with AI. Lots of people are saying, "Well, I can vibe code my own app," and that's unlocking so much creativity, and it's actually going to be incredible to see where we are in 6 to 12 months just on the AI side. I think that it's going to be incredibly um, deflationary insofar as, if you think about it, anyone can start really offering app services. They can build apps. So effectively, you're going to have supply of apps and services that hits the market, and even knowledge and intelligence. So I think that to some degree, knowledge work will also reduce in value because you'll have intelligence everywhere, and that will do some very strange things in the economy. And it's impossible to model what that looks like. Some people say it's going to, push GDP to 10%. Other people say it's going to mean that most people don't have jobs and therefore spending goes to zero. So you've got a huge bit off a spread between a bad outcome and a good outcome, and there's everything in the middle as well. So to go to your question, like I care a lot about my personal fitness, and some call me boring. I don't drink, I don't smoke. No, it's been a long time since I did either of those things. I'm very healthy. I try to be as healthy as I can, but I'm also aware that you do all these things, and my one of my first mentors in the city told me is like, you can get all your sums right, and you can still get hit by an asteroid, and that's the same with anything, right? So you can do the things that that give you space, that build up your health. You try and take breaks for your mental health, your meditation, all these kind of things. I'm really into those kind of things, and I think they're great. But equally, you have to stay aware that you're still going to get caught in the ups and downs, and it's still going to be hard, right? 10 years in crypto has been really hard, harder than anything that I saw in TradFi, and so you have to love it. Actually, I do love it, which is great. Like, Mauricio, you love it too. You've done 600 episodes of this stuff, and I was looking at your background. We were talking about it in the green room. Like, you've done a lot. You were in blockchain super early as well. You clearly love it, and that makes a big difference. If you look at these things and go, oh God, another day, and the Bitcoin price is down to 60,000 like it was in early February, and it's like, God, what am I doing? But if you love it, you can see through it. And I think that's one of the key things. I think we always bring it back down to having meaningful work, meaningful relationships, and then the ability to suffer in a very happy way. I think that is it. And then you'll be amazed at how much you can take that life throws at.
That echoes for sure. We went micro, let's go macro a little bit. Industry wide, we could pick a lot of them, but I want to hear one. What is the one thing we must fix now to avoid working another 10, 20 years and then realizing we missed that and now we're back to square one? Like, what is the one thing and why?
I think we need to remember why we started this thing in the first place, and that is that permissionlessness, and you want to make sure that we have a way to do that is still safe, but sticks to that ethos. Banking people is everywhere. It's terribly important. One might uncharitably say that all we've got really to show for anything is stablecoins and Bitcoin. That's just not true, right? We've got a whole list of great innovations that have happened because of blockchain and crypto that we have to remember and in a way stay true to. So I think it's about, okay, the institutions are coming, but we can't institutionalize crypto just like the TradFi rails are. You have to remember that this is a inclusive technology and it should remain so. That's really important. The other thing is that I've noticed increased tribalism hitting uh, blockchain. And you can see why it is, right? Because there are 200 layer ones, there are 400 layer twos, and various different, tons of applications that do the same thing. So clearly that drives a us and them type approach. But really, we need to look at this inclusively and say, okay, um, we're still humans, and the same goes for AI. Like, how do we remain human here? Is that we are still working together here to try and create something, a system that is better, and we need to remember to stay cordial and nice to each other, and build together because we need each other. And so that is the one thing I would say when you look at the macro, when you look at the fights that are breaking out globally, like, everything has justifiable reasons on both sides, but ultimately we as a human race need to work together when we're living through such intense periods of change driven by AI and various other drivers, that we're going to need to be friendly with each other, I think.
I hear you. That is that's noble. We're still human though. In terms of bringing people into the industry, yeah, you probably are approached by clients and colleagues that have been working with you from your TradFi days. Every time there's a Bitcoin all-time high, I'm sure people call you like, James, how do I get in? How do you onboard? Is this? I mean, if this is something you do professionally, would love to hear it. But on your kind of day-to-day, like holiday type stuff, is this something people ask of you, and how do you bring them in if you even do that?
Yeah, I'm very careful with financial advice, and again, remember the risk, the risk disclaimer that I gave at the beginning. Um, yield stuff is one thing where you're not taking market risk, but ultimately, if you're investing and positioning yourself in crypto, I think one of the key things is that you need to understand deeply what you're getting into, and the way to do that sometimes is just to take a little position in something, because once you've got the position, it forces you, it's human nature, you'll start looking at it, you'll start wanting to be researching more. That's certainly how it worked with me, right? I bought a little bit of Bitcoin and I'm like, okay, I think I'm in it for these reasons. And then I became fascinated. And when you become fascinated and you go deep, 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 then you begin to really understand it. And I think so friends will get, hype cycles are important. Let's not forget that as well. Hype cycles in crypto are important because the price moves triggers new people that become interested. Right? If the price only ever went down, you wouldn't get any people adopting it whatsoever. So you need that. But then you need probably to be responsible around it. And you need to say to your friends, look, if you are interested in coming in, I'll spend some time talking to you about it. But then you do need to try and do your own research. I would only ever say look at Bitcoin and understand Bitcoin and see what you think, and maybe buy a little bit, $50 tops, that kind of stuff. Just get a bit of exposure and see how it works. And then I think their natural curiosity either takes them deeper and they go deeper and they start doing stuff, or actually they go, this was not for me, and then they can treat it as a learning curve. So I'm very, very careful actually with my friends in particular, because no one wants to be that guy that told them to go invest in something, and of course it's a long-term game, and they look at it on a 6-month basis and they might be down 90%, which would have been the case with some of the altcoins even in the last 12 months. So it's very, very careful, but I tend to look to see if they're genuinely interested. And if it's just like they want to make money in 2 weeks, then I tell them to try the horses or something.
Well, that's still financial advice, but awesome, man. We're about time, but I would love to get you the parting words. What would you like the listeners to take away from what we went through, your background, your story, all very interesting things, the things you're doing. So what would be the thing you would want the audience to extract from this conversation?
I've spent a lot of time in financial markets, and one talks about having an open mind, right? You need to have strong beliefs, but when new information comes, you need to be able to move those strong beliefs and to change your mind. And I think that with the forces that we're seeing at the moment, so crypto has taken a bit of a back burner when it comes to AI at the moment, is keep an open mind. And I would say be curious and lean into it. And so I think that's important. And on a company level, I'm very excited with Tesseract's new product launch. The dedicated compliant vaults are a big innovation that I'm very, very proud of. It's something that we've really workshopped and leaned into. So I think that's something that if the users are interested to take a little look at that, and you can catch us on our website, tesseract.fi, or we're on LinkedIn as well. And we're really trying to push our Twitter account, but that's a labor of love after having neglected it for a while. And so really, it's that we're very affable, open humans at Tesseract. So if there are people that want to ask questions, we're around. Shoot us a message, and build. And I think that it's like the advice that I gave to my friend that insists that he wants to buy some Bitcoin is just lean into it. Just have a little play with AI. Try building an agent. Don't give it your credit card details for sure, because it will go off and spend your money. Various of my friends have already seen that firsthand. But have a play, see what it can do, and then see where it takes you.
James, this was a pleasure. Thanks for coming over, and hopefully we'll bump into each other in a random crypto event somewhere in the world.
Absolute pleasure, Mauricio. Thank you.
Thank you. Catch us online. We're on Instagram at BlockDrops Podcast, on Twitter at BlockDrops Pod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberboom Tech, and all of the other major streaming platforms. Yay! Shout out to James for such an insightful conversation and for being in this convergence piece between TradFi and DeFi. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird. LFG.